March is behind us by the time you're watching this video, and honestly it played out pretty much exactly how you would expect if you compare it to the history for Bitcoin. We got that rally in the first week of March, a strong move to the upside that gave people some hope that the worst might be over. But then after the first week the rally was over, then we later in the middle of March swept that high before eventually rolling over again. If we zoom out a bit, that rally from that February low was actually pretty significant. From the bottom we put in at the start of February, Bitcoin pushed roughly 26% to the upside before running straight into resistance around the 76k level. And that level is not random. It's a strong resistance zone both technically and psychologically. So it's no surprise that the price struggled here before eventually getting rejected. But here is where things get interesting. This March rally means that Bitcoin has once again followed historical behavior almost perfectly. If you go back and look at other bear markets in mid-term years, we usually get a rally in March. It's something that has repeated every single bear market. So the real question now is, what happens next? Well, recently I have been comparing a lot to 2022, and that is for good reason. Structurally, it looks very similar to what we are seeing today. Back then we also saw a rally in early March, which again lines up with what we have seen in other post-halving years. But in 2022, that rally high we got in early March got swept later by the end of March, before we eventually rolled over into April. Now looking at where we are today, we are already seeing the price start to roll over again by the time of recording this video. But, and this is important, there is a possibility that we might start to rally again in early April, potentially even sweeping the highs from March. And if that happens, then suddenly the comparison to 2022 becomes less clean. Because if we move away from 2022 and instead look at other bear market years like 2014 or 2018, we actually see a different pattern in April. In those years, April wasn't bearish, it was actually bullish. Take 2018 as an example. Pretty much the entire month of April was a rally for Bitcoin. Price pushed higher consistently before eventually rolling over again. And if we go even further back to 2014, the rally didn't just last a few weeks. It went from early April all the way into June before finally losing momentum. So now we have a bit of a split in the data. On one side we have 2022 that suggests that April should be bearish. On the other side we have 2014 and 2018, which are two separate bear markets, both suggesting that April could be a month of relief for Bitcoin. So which one should we follow? That's where things gets a bit more interesting. Because again, in the other bear markets we rallied in April, but 2022 wasn't the same. 2022 basically rallied in the end of March, and going into April it rolled over. And right now some people are comparing the current situation for Bitcoin to that structure, essentially saying that the rally is over and we are gonna roll over into April. And to be fair, that's a completely valid view. But instead of focusing on 2022, I personally think 2018 is a very interesting year to look into, especially given the current state of the market here in 2026. Let me explain why. Back in 2018 we had very similar structure to what we have today. There was a strong move down followed by a sharp relief rally, and then a key level formed that held for quite some time. Specifically, in early February 2018, we saw a big wick down to around $6,000. That level ended up acting as a kind of temporary floor. Price didn't immediately break below it. Instead, it hovered above that level for a while. But eventually, that support couldn't hold forever. When Bitcoin finally broke below $6,000, it didn't take long. About a month later, the absolute bottom of that bear market was in. Now let's bring that forward to today. In early February this year, we also saw a large wick down, this time to around $60,000. And yes, I know comparing $6,000 to $60,000 might sound overly simplistic, but the point here isn't the exact number, it's the structure. We now have a clearly defined level at $60,000, which the market has reacted to strongly. And in my opinion, it actually makes a lot of sense that we could hold this level for a while before eventually breaking it later in the cycle. So one possible scenario is this. We get some kind of rally into April, maybe not anything crazy, but a decent push up. Then the price is gonna roll over and drift down to around $60,000. And instead of immediately breaking it, we can either see small rallies or go sideways. So we chop around this level, we consolidate, we simply hold that level. And during that time, something super important happens. The indicators reset. Because right now a lot of the indicators are showing extreme conditions. Some of these indicators are so oversold that they are suggesting that the bottom could already be in. But at the same time, you can always find other indicators that suggest otherwise. Take the RSI for example, which is one of the most well-known indicators. On the weekly time frame, the RSI was just in the overbought zone. Historically, in bear markets, that has actually been around the low for Bitcoin. But then if you zoom out even further and look at the monthly RSI, you can make a completely different argument. If you draw a trend line across previous bear market lows, you'll notice that we are not quite there yet if we are comparing it. In my opinion, we haven't reached that final bottom zone yet. But this was just to show you can look at different time frames and make different arguments. And that's really the key point here. The data is mixed. Even if you look at something like Bitcoin divided with gold, you can find some similar arguments. On one hand, it's at levels where previous bear markets have bottomed. On the other hand, there is rallies at the start of April or March, depending on what year you look at, before eventually heading lower. So instead of trying to find one indicator that gives us an exact answer, I think it's more important to think in terms of scenarios. And one of the more realistic scenarios, at least in my opinion, is that we don't just crash straight down from here. Instead, we take time, we move sideways, we get these small rallies, we allow the market to breathe. And allowing the markets to breathe also helps reset these indicators so we can eventually go lower. And this is also where the macro environment becomes important. Because if you look at the broader economy, things might not be as bad as the headlines make it seem. For example, initial jobless claims are still relatively low. They are not at levels that historically signal the beginning of a recession. The same goes for continuing jobless claims. They are elevated compared to previous years, but not near recession triggering levels. And then you can look at something like jobs created and see that we are near these recession levels. So again, you can make arguments for and against everything. But what this suggests is definitely that the economy is slowing down. But again, we haven't seen that widespread layoffs, which typically marks the start of a downturn. And that matters. Because a true recession environment would of course put a lot of pressure on risk assets like Bitcoin. So as long as we don't see that escalation, the market might have room to stabilize instead of collapsing. So let's bring it all together. My base case right now is not an immediate breakdown. Instead, I think there is a strong argument for Bitcoin to hold around this $60,000 level, while we see smaller rallies over the coming months or just some sideways price action. Again, similar to what we saw in 2018. This kind of price action would also be healthy for the market. It would allow indicators to reset, sentiment to cool off, and positioning to normalize. Because in my opinion, it is hard to expect a drop from now, especially with these indicators already being at oversold territory. So by moving sideways or slightly up, the markets essentially buys time before the next move. And once those conditions reset, then I am prepared for the next move down if it happens. As I have mentioned in my other videos, I'm comparing the current situation a lot to previous cycles. So around June, I'm going to be starting to looking for signs of a bottom. But if we go strictly off the historical timing, the low being in October is probably the more realistic view. That would mean Bitcoin 1 year from the cycle top in 2025. That would put us roughly 1 year from the cycle top, which is what has historically happened. I'll not go deeper into that in today's video because I have talked about that in some of my previous videos. But for now, that's the broader framework I'm working with. So if you enjoyed this video, remember to like and subscribe. Comment down below what I can do better. I love to hear from you guys. And remember, the markets reward patience far more than predictions. those who wait for clarity often beats those who wait for certainty. I'll see you guys in the next one. Peace.